Everybody likes monthly income. This is particularly true if you're in retirement or approaching retirement. Larger companies normally pay quarterly dividends, but with little bit of planning, you can design your own monthly cash machine. To do this, I have developed a very simple Google Sheet spreadsheet that you can customize based on your needs. And watch this video till the end, and I will tell you how you can download it for free. This video is divided into 5 sections. Section number 1 is about the rules. I have pre-selected 7 rules that I'm going to use for this video. The section number 2 is once I have set these rules, I will enter them into Yahoo Finance Stock Screener. At the time of recording, Yahoo Finance Stock Screener can be used for 56 countries. Section number 3, once I get a short list of stocks, I will enter them into Google Sheet spreadsheet, which will fetch information from Google Finance. At the time of recording, Google Finance can get information from 52 stock exchanges of the world. So whether you are in Canada, whether you're in US, India, Australia, New Zealand, you can customize it based on your needs. Section number 4, now I have a big picture view of all these stocks that will meet my criteria. Number 5, once I've selected few stocks for my monthly income, I will do a little bit more financial analysis to make sure that it meets my requirement and I'm comfortable that the dividends are safe. But like any other investment, stock market is always risky. Make sure that you follow your own money management and risk management rules. Hello, welcome back. My name is David Dunst. I hope you guys are all doing well. If you have not subscribed to my channel yet, please do so that you do not miss my future videos. So let's get started, and I'm going to share my computer screen. Now I am in Yahoo Finance website. I go to Screeners, Equity Screener. This is where you enter all the 7 rules. I recently made few videos on how to use Yahoo Stock Screener. The links are in the description. As I'm trying to focus on Canadian stocks, so the region I'm going to select is Canada. On the market cap, I'm going to select only large cap and mega cap. I'm going to pick stocks which are greater than $10. So now we have 3 rules. I'm going to add 4 more. The next one is average 3 months volume. Then I'm going to enter P by B ratio, which is the price to book value ratio, forward dividend yield. The next one is earnings per share. I close. So we now have 7 rules. 1, 2, 3, 4, 5, 6, 7. The average volume 3 months, I'm going to stick with some liquid stocks, which is 100,000. Price to book value, I'm going to keep it less than 3. Forward dividend yield, I want to have yield which is more than 4%. And EPS, which is the earnings per share, I want to have it positive. So now I have a list of 19 stocks. So now we are moving to section number 2, which is finding these stocks. I'm going to do find stocks. If you scroll down, we have a list of these 19 stocks. This is section 3 of my video. I have entered those 19 stock symbols in column number A of this Google Sheet spreadsheet. This sheet is highly customizable. As soon as I enter the stock symbol in column number 1, the information about the company name, the price, the 1-year chart, which is the 365-day chart, the P ratio, the earnings per share will be automatically entered in this spreadsheet. So this information is obtained from Google Finance automatically. That's the reason I have mentioned that this is auto fetch from Google Finance from column B to column F. The yield, which is in column G, I've entered this information manually, and I went to each of these companies' website to have the information about the dividend yield when the dividends are paid, and which I have highlighted in green. So for example, for Royal Bank of Canada, the price of the stock as of closing April 6th, 2023 was $130.55. This is the variation of the 52-week chart. P ratio is about 12.42. Earnings per share is 10.51. The yield is 4.04, and they pay dividends in February, in May, in August, and in November. And I'm a bit sorry about the font size, because if you're watching this video on a mobile, the font will be very small. And one of the viewers inform me about that. But unfortunately, I cannot do anything on this particular spreadsheet at the moment. You can watch it on your computer or on your tablet, which will probably have better resolution than your mobile phone. This is a logo that I have designed recently, and I hope you like it. I'm going to remove it for the discussion purposes here. So this table tells me there are 7 stocks which pay in January, 6 in February, 8 in March, and the same goes up to December. And I have entered this information from column G to December manually, and that's the reason I said information entered manually. And this was my section 3 of my video. The good thing about this spreadsheet is highly customizable. You can make the changes as you see fit. You can actually sort this by P ratio. You can sort them by EPS. You can sort them by yield. So for example, if you're interested in for Johnson & Johnson, just in J, all the information is uploaded automatically. But not this part. Between G and up to December, this portion is not entered. You have to enter it manually, which I mentioned in the last in row number 22. For Brookfield Infrastructure Partners, the P ratio and the earnings per share is giving some error because somehow it's having some problem getting the information from Google Finance. So the section 4 is covered in this spreadsheet as well. It gives me a big picture view of which stocks pay me on which months. We can see here that there are about 4 stocks which are paying over 6% dividend yield. One is Enbridge, 6.75. The next one is Bank of Nova Scotia, 6.11. TC Pipelines, 6.77. And Power Corporation, 6.08. You may ask that there are many other stocks which are paying more than 10% dividend yield, why they are not here and why you're not including. Again, this is based on my rules. You can change your own rules and find out which stocks will meet those criteria. I'm focusing only on large cap and mega cap stock, which meets my rules. But you're flexible to select your own. For section number 5, I'm not going to pick all the 19 stocks for my dividend portfolio. Maybe I will only pick, say, 4. So just to make sure that these 4 meets my criteria, I may look at payout ratio. I may look at the free cash flow. I want to make sure that the dividends are paid from the earnings and the free cash flow. I want to see what was the dividend growth, how long they have been increasing the dividends, and if the dividend growth is less or more than the earnings per share growth. So I can do all this analysis as a part of my section 5. So at the end of it, you may ask, what is the monthly cash machine? How I can use this information, which I'm going to explain next. So for example, we picked 4 stocks which are paying over 6% yield. So that's Enbridge, Bank of Nova Scotia, TC Pipelines, and Power Corporation. So we have payment from January, February, March, all the way up to December. And say, for example, we have a $100,000 portfolio and I want to divide into 4 stocks. So I'm assigning $25,000 for each of the stocks. At this current price of $52.57, I will be able to buy 475 shares of Enbridge. Similarly, 370 shares of Bank of Nova Scotia, 455 shares of TC Pipelines, and 723 shares of Power Corporation. If you take this information about the dividend yield, these are the dividend yields I will receive from each of these stocks for the whole year. And based on their payment dates, I've divided them. How much will I get every month? So at the end of the year, I will get $6,427.50 in dividend, and these are the distributions. So you can decide that if these dividends are good enough for my purpose, and you can adjust it according to your needs. You can have access to this Google Sheet spreadsheet. Just say that you need this in the comment section below, and I will get in touch with you. Thank you. Thumbs up if you like the video. I hope it was useful, and I will see you in the next one.